Assalamu alaikum wa rahmatullahi wa barakatuhu. We are with you with a new slideshow and giving a slideshow on accounts receivable. In this slideshow, I will be solving one exercise and would be clearing several questions in your mind. We go directly to the first slide, giving the question. Over here, the question is narrated. Following transaction and account balances are taken from the accounting records of Mariam Traders. These are the beginning year balances of account receivable on January 1, 275,000. Allowance for doubtful accounts is 2750. Allowance for doubtful accounts is a contra asset account and it is deducted from the account receivable balance, giving us net account receivable. This gives us this resolves, or it is according to the prudence principle that we shall have already assumed how much accounts would not be collectible. So they assume that 2750, or it is, in other words, it's given given in the question that it's in fact 1% of the total account receivable on January 1, 2016. Transactions for the year ended December 31, 2016 are as follows. Sales on account credit sales were 600,000. Sales discount availed by a customer. It's normally given to those customers to increase with purchase a lot, have a big purchases, and the company gives them certain discounts so that it's an encouragement for them to increase their purchases. Cash collected from customers is 475,000. So this is the cash from credit customers. The company follows the balance sheet approach to estimate uncollectible accounts at 1% of account receivable. See over here, it is given 1% of account receivable at any time. So when we have 275,000 as the uncollectible, and if we have a policy of 1% of account receivable, this is the account allowance for bad debt, you can say, allowance for doubtful accounts. It is the same thing. What are we required to do? 4 requirements. Record the above transactions in general ledger. Give adjusting entries on December 31, 2016. Adjusting entries, and third is prepare account receivable and accounts allowance for bad debt ledgers, and prepare partial balance sheet. These are the 4 requirements. We shall be covering these requirements in the next slides. So to the next slide. Our first solution is journal entries for account receivable. It is how much we have credit sales 600, account receivable is debited, and sales are credited. This is the total credit sale for the year. And for sales discount, it is debited. It's an expense for the company. Sales discount is debited, and account receivable is credited. It is credited, and cash collected is definitely, it has a journal entry as cash is debited and account receivable is credited. In the next slide, we will see the ledger accounts also. Okay, in this slide we are going to compute allowance for bad debt for this year. Account receivable balance 385,000. How do we get 385,000? It is, in fact, if you remember, we have an opening balance of 275,000 plus 600 thousand as total sales, total credits, account receivable for this year. If we add it and we minus deduct from it 15,000 as sales discount, and the cash collected is around 475,000. So if we go through this, we'll get a balance of 385,000 as net as account receivable on December 31, 2006. Uncollectible rate is 1%. We already know that, and uncollectible amount would be 3850. So we have to have a total allowance for bad debt this year shall be 3850. And you remember that we already have allowance for bad debt, balance is 2750, and so we are left with only 1100 further additional allowance for bad debt. There would be an adjusting entry for 1100. This is computed, or the journal entry is shown in the next slide. These are the adjusting entries. Bad debt expense is debited for its adjusting entry for allowance for bad debt. Bad debt expense is debited and allowance for bad debt is credited. Okay, and to close the bad debt expense account, expense and revenue summary is debited and bad debt expense is credited. This is the closing journal entry for bad debt expense account. And below given is account receivable ledger. You remember balance is 275,000 and total credit sales were 600,000. So total account receivable is 875,000, and but sales discount is there, so we have to deduct 15,000 from as sales discount. Cash what we have received from the credit customers, that is 475,000, and we are left with account receivable balance as 385,000. So the account is 385,000 account receivable as the balance account. And the allowance for bad debt ledger, this is the ledger account for allowance for bad debt. Balance, opening balance is 2750, adjustment is 1100, and the balance we would get is 3850. This is the requirement that we shall have 1% allowance for bad debt, and account receivable balance as you see in the above ledger is 385,000, and 1% of 385,000 is 3850. Now we go to the next slide. This is our last slide showing the partial balance sheet. Account receivable is for this year is 385,000. This is given to December 31st, 2016, or January 1, 2017 is the same picture. Account receivable is 385,000, and allowance for bad debt is deducted from the total account receivables, and we get the net account receivables or net receivables. This is how we resolve or we solve the account receivable problems. I hope that you have understood the problem, you have understood everything, and kindly practice it and subscribe to the channel and share it with your friends. Thank you so much.